Good evening, everyone, and a very happy new year. It is my pleasure to join you today for the second investor call of Jio Financial Services Limited. The prospects of our economy continue to remain bright, with all macro indicators pointing to a continued robust growth, which in turn provides opportunities for Jio Financial Services. As is widely known, the key underpinnings of the growth are favorable demography, rising affluence, increased savings and investments, and rising entrepreneurship spirit in India. Digital India will continue to play a vital role as the growth unfolds over the coming years. While the opportunity spectrum continues to remain attractive, we also remain observant about the recent market developments, especially in the unsecured consumer loan segment. As a consequence of some of the early warning signals, the Reserve Bank of India has increased risk weights for lending to NBFCs and certain lending categories by the NBFCs. In the quarter ended December 31, 2023, we have successfully completed the sandbox for our consumer durable loans and personal loans. The entire loan process is digital with robust systems in place for underwriting and customer journeys to ensure both adequate guardrails and at the same time seamless experience is provided to our customers. Given the current environmental factors on these products, we are now tightening the credit frameworks to ensure that the foundation blocks on risk and underwriting for JFS remain strong. In the near term, now our focus is predominantly on secured avenues of lending and leasing. As a part of our accelerated journey on secured lending roadmap, we have devised an operating lease model which aims to provide what we have called device as a service for consumer devices across the country, which will help us create new markets. In this model, JFS will provide equipment such as digital air fiber, phones, laptops, and various other equipments on lease to end consumers. In addition to providing a unique launchpad to acquire customers in a risk calibrated manner, the payment track record of these lease rentals over a period of time adds a rich layer of intelligence to cross sell further financial products and services. The operating lease business that I have just described will be launched through a separate, wholly owned leasing subsidiary of JFS. In this quarter, we have also been working towards a supply chain financing solution. A supply chain financing solution provides an opportunity to create short term self liquidating exposure, which is closely linked with underlying trade and commerce. This product will be launched in the coming quarters. The planned approach here is to first leverage the rich ecosystem of JFS as an opportunity. With the growing depth and breadth of retail capital markets in India and the rapid advancements that have been made in the public digital infrastructure in the recent years, we see an opportunity in lending against shares and mutual funds. We believe that our superior technological capabilities and customer experience will be differentiators for us to win in these markets. Moving forward on other businesses, we continue to expand the partnership suite for our insurance broking entity and have increased the number of insurance company tie-ups to 27 insurance companies as of December 31, 2023. We continue to offer a full range of products and solutions across life, non-life, and health insurance products for our customers. On the payment bank, we have completely revamped our digital savings account and launched virtual debit cards. Our payment solutions company has successfully completed a pilot of the Jio Voice Box for merchants, and the feedback has been positive. Simultaneously, a merchant app has also been launched along with the Jio Voice Box. This is our first step towards digitizing the merchant collections, which in turn will help us capture valuable data to harness cross-sell opportunities. Further, we have enabled Jio Bharat phones with UPI 123. Now, I would like to give you a short update on governance and other foundational aspects. The board of directors of JFS has now been reconstituted and necessary regulatory approvals are in place for the holding company. I'm also happy to note that as a foundational step, We have embedded the principles of ESG as a part of our business process. A board level committee has been set up to provide necessary oversight and guidance. We also continue to build on our technology and management capabilities across various businesses. On the regulatory front, in line with the terms of our scheme of arrangement for demerger from Reliance Industries Limited, we have filed our application with the Reserve Bank of India for conversion of Jio Financial Services from an NBFC to a core investment company. In this quarter, we've also filed our application with the Securities and Exchange Board of India, SEBI, for an in principle approval for our joint venture with BlackRock on the asset management business. From a structural point of view, including the asset management business and the leasing company, we will now have six customer facing entities. In conclusion, I would like to say that we continue to build on our ambition to democratize financial services across the spectrum by offering simple, affordable, innovative, and intuitive products. Our core principles of building the business remain the same, that is, reputation above all, regulatory adherence in letter and spirit, return of capital, and return on capital. We will continue to build on the strength of our brand, capital, and the team that we are putting together. Last but not the least, we will also continue to derive benefit from the fact that we do not have any technology debt and hence are putting together a modern, fit for purpose, contemporary technology stack. We remain committed to rewarding your trust in us with superior sustainable returns over the long term. Now, I'll request my colleague, Mr. Charanjit Atra, Chief Operating Officer, to take you through the detailed financial statements. Charanjit, over to you.
Thank you, Hitesh, and good evening, everyone. I am pleased to present to you the financial highlights for the 9 months ended December 31st, 2023. The financial results for the 9 months ended December 31st, 2023 are prepared under the Indian accounting standards as prescribed by the Ministry of Corporate Affairs. Jio Financial Services Limited has submitted an application for conversion of the company from a systematically important non-deposit taking non-banking financial company registered with the Reserve Bank of India to a core investment company. This application is in accordance with the approval given by the Reserve Bank of India for the change in the shareholding pattern and control of the company pursuant to the demerger. The company is a holding company and operates its financial services business through its consumer-facing subsidiaries, which are Jio Finance Limited, formerly known as Reliance Retail Finance Limited, a registered NBFC, and is engaged in the business of lending and making investments in shares and securities in India. Jio Insurance Broking Limited, formerly known as Reliance Retail Insurance Broking Limited, engaged in the business of insurance broking in India. Jio Payment Solutions Limited, formerly known as Reliance Payment Solutions Limited, engaged in the business of payment gateways and payment aggregator business, including merchant payments. In addition to the above, the consolidated financial statements also include the results of Reliance Industrial Investment Holdings Limited, Jio Infrastructure Management Services Limited, and Jio Information Aggregator Services Limited, which are subsidiaries, and Reliance Strategic Holdings Limited, which has been accounted for as an associate in accordance with the Indian accounting standards. On December 31st, 2023, Reliance Industrial Investment Holdings Limited holds 24.09 crore equity shares of RIL, representing 3.56% of the paid-up share capital of RIL, and is the sole beneficiary of 17.19 crore equity shares, representing 2.54% of the paid-up share capital of RIL held by Reliance Strategic Holdings Limited. We also have a joint venture, namely Jio Payments Bank Limited, engaged in the business of providing financial services, including payment banking facilities and retail banking facilities in accordance with the guidelines issued by the Reserve Bank of India. The consolidated profit after tax for the 9 months ended December 31st, 2023 stood at rupees 1,294 crores, and for the quarter ended December 31st, 2023 stood at rupees 294 crores. The standalone profit after tax for 9 months ended December 31st, 2023 stood at rupees 305 crores, and for the quarter ended December 31st, 2023 stood at rupees 71 crores. For a new entrant like us, which has no legacy book or legacy systems, there is a great opportunity to accelerate our secure lending proposition. Accordingly, we plan to launch a leasing business and a supply chain financing business. Our capability building is well on track. Key leadership positions have been filled, and as at December 31st, 2023, we are 516 people strong. The technology stack has now been put in place with the completion of the personal loans and the consumer durable loans in Sandbox. Since the figures of the previous year are not comparable, I would now present the quarterly and year-to-date numbers. The consolidated pre-provisioning operating profit was rupees 1,212 crores for the 9-month period ended December 31st, 2023. Similarly, the consolidated pre-provisioning operating profit was rupees 316 crores for 3 months ended December 31st, 2023, as compared to rupees 537 crore for the 3 months ended September 30th, 2023, primarily due to dividend income of rupees 217 crore in Q2 2024 as compared to no dividend income in Q3 2024, and higher operating expenses in Q3 2024, reflecting certain one-time costs incurred for capability building and CSR activities. The standalone pre-provisioning operating profit was rupees 417 crores for 9-month period ended December 31st, 2023. The standalone pre-operating profit was rupees 98 crores for 3 month ended period December 31, 2023 as compared to rupees 124 crore for the 3 month period ended September 30th, 2023, primarily due to higher operating expenses in Q3 2024, reflecting certain one-time costs incurred for capability building and CSR activities. The consolidated interest income increased from rupees 186 crore in Q2 2024 to rupees 270 crore in Q3 2024, primarily due to increase in average interest earning assets. The fees and commission income remained at similar levels in Q3 2024 as compared to Q2 2024. The net gain on fair value changes decreased from rupees 164 crore in Q2 2024 to rupees 103 crore in Q3 2024, primarily due to redemption of certain money market instruments. The staff expenses increased to rupees 33 crores in Q3 2024 from rupees 31 crore in Q2 2024, representing an increase in the number of employees. The increase in the other operating expenses was primarily due to one-time costs incurred for capability building and CSR activities. This has resulted in a consolidated profit after tax at rupees 1,294 crores for the 9-month period ended December 31st, 2023. The share of JV and associates was rupees 66 crores in Q3 2024 as compared to rupees 218 crores in Q2 2024, reflecting no dividend income in Q3 2024 as compared to rupees 154 crores in Q2 2024. The standalone profit after tax was at rupees 71 crores in Q3 2024 from rupees 89 crores in Q2 2024. Now, I would like to hand over the presentation back to Jill. Thank you so much.
Thank you both for the presentation, and thank you everyone for joining this call. Again, our earnings presentation is uploaded on our website www.jfs.in and the stock exchanges. On behalf of JFSL, this concludes the earnings call. You may now disconnect your line.